Well, welcome everyone. Thank you all for joining us this evening.
All right.
This is our first in-person event for SSA. So I think this is a major accomplishment. Coming out of the pandemic, at virtual sessions, and moving forward, we're going to have more in person. And tonight, we're going to be focused on blockchain technology and the use case around it in the enterprise scale. And our panel here is going to be discussing that, led by Rup Singh, Frank Hynek from NCR, and Jason Malfettis from the Federal Reserve of Atlanta. But before we get started, I want to thank our sponsors. So QTS is hosting us this evening. So big round of applause for QTS. And for catering in our food and snacks brought to you by iVision. We also want to thank iVision. All right, so before we go further, I also want to give Bob Gargash a moment to just speak about QTS.
Thank you very much. Hey, we appreciate you guys all being here and love the in-person stuff. And so, couple things. Please make yourself at home. If you need anything, just let Jen, Joe, or I know while you're here. The break room's there if you want something hot, hot coffee, hot tea. Restrooms are out there. So just please let us know if we can make this more comfortable for you. The other thing is, quick blurb on QTS is, you know, we're a core values, family-centric, partner-centric, #1 customer service, third-party validated NPS score in the entire industry, 6 years running. Our NPS scores right now are running in the 95, which is a nutty score, and it's just we spend a maniacal focus trying to make sure that our clients feel the love, right? So we've got about 8 million square foot now, I believe, of data center footprint.
And growing.
And growing. So we're building, we've got 100 acres here in West Midtown. We're building a 1 million square foot facility next to us that's about full. This is a 500,000 square foot facility. We've got 2 more being erected as we speak. And we would love to give you guys personal tours, lunch tours, group tours. If anybody wants to see what we're doing, it's really cool stuff. So we can do that later. Just hit Jen, Joe, or I up. That's Joe McKenna right here. Jen, did you want to say a few words?
No, just want to welcome you all. We house some of the most sophisticated companies in the world and give them a safe, secure place to keep the data in our data center here and all over the U.S. and coming soon more in Europe, from what I understand. But we got to be in the Netherlands, and would love to, as Bob said, would love to show you around. We are super proud of this facility, and would love to show it off at any point in time. So, any questions? Feel free to ask. But just happy to have you all here, and take it away.
Well, thank you.
Thank you.
Well, before we also kick off, I also want to thank the TAG SSA board, because we are volunteers. So I want to thank everyone who put in the time and effort to make tonight happen. I also want to thank TAG for also organizing all this as well. Now, I want to pass things along to Rup, take over as our moderator, and allow you to take it from there.
Thank you, John. Hey guys, would you do me a favor? This is a small, intimate type setting. The room is bigger, so why don't you come up front if there are more chairs. And we don't have microphones, so you're gonna have to make sure you actually understand things coming out of our mouths. Wonderful. So as we get warmed up here, let's take a quick poll in the room. On a scale of 1 to 10, how many of you understand blockchain as a technology? 1 being beginner, 10 being expert. So let's say between 1 to 5, just raise your hands. Okay, that's most of the room. Let's say from 5 to 10. Okay, I know those guys. Need to talk to those guys. Okay, let's ask another question then. On a same scale of 1 to 10, how well do you understand blockchain as a strategy? 1 to 5. Okay, from 5 to 10. Come on, guys, you know. Don't be shy. Well, thanks for sharing that, and that gives us a baseline of where the room is at. My name is Roop Singh, as you know very well. I run a company called Intuit Factory. It's a blockchain education and strategy firm. So I talk often on these topics, and Frank and I were together in the TAG Blockchain Society a few months ago. So we have talked often. I'm very familiar with the work he and NCR have been doing in the space, so we'll get into details of that. We had just met Jason recently, and we had a great conversation from the perspective of Fed, but also from the perspective of his previous engagements with a lot of enterprise companies. So what we'd like to share with you today is the perspective that these guys bring and the challenges they have faced in developing blockchain applications, and help you separate myths from reality. There's a lot of, let's say, hype out there. There's a lot of misinformation. Most of you think blockchain is equal to crypto, so chapter 1, lesson 1 is it is not. Blockchain is the foundational technology behind what became cryptocurrencies. It is the same thing as saying if email was the same as internet. If I explained to you back in the 90s, email is the same as the internet, and 20 years later you look at me funny. So that's the essential difference. Now, having laid that foundation, let's get into it. So Frank, go ahead and introduce yourself and share with us the journey NCR has had in the last few years, which I'm familiar with, in your experiences in experimenting with developing solutions based on blockchain technology, and look at from all different points of view, from your customers, from your internal stakeholders, be it your leadership, and also from external world that we live in. And we've seen the industry move in the last 5-6 years, from 2017 to 2022. We're not at the same times anymore. So share your experiences.
Yeah, so my last 4 years have been spent basically running an R&D team. And that's really how I got introduced to this at an enterprise scale. Let's say on the personal side, had been aware of in the space since about 2012, but was given the opportunity to explore all new emerging technologies. Obviously, this is one, back to the buzzword stage, was certainly one of the main cards on your buzzword bingo was blockchain, right? IoT, cloud, lots of other things have come before that at one stage were kind of more maybe fad, hype rather than fiction. But I think as we've seen over the last few years, that's begun to mature. And so kind of starting in that stage is really early explanation. What is this technology? What does it mean to our customers? For those that aren't familiar with NCR, we serve basically 3 major industries. So finance, lots of banks, lots of fintechs, retail, large and medium scale retail operators, and then restaurants. So your Chipotle's, your McDonald's, those kinds of companies. And so thinking about like the worlds of hospitality, retail, and banking, how does this technology have the potential to impact them, and what's real versus what's just hype? And so spent a lot of time with the team of product folks, design people, engineers, basically prototyping and getting feedback to actually take from the PowerPoint world into practicality. Like, how does this actually work? What does it mean? And so that journey has kind of gone from early discovery, experimenting with very small scale prototypes, to really coming to the understanding that this technology is foundational. And when I describe it, especially to people who are new to the space, sounds like all of you have some exposure, some are experts, but in general, thinking about, for those that maybe at least have been around long enough to remember the early days of the internet and what it felt like back in the 90s, the mid 90s, the late 90s, early 2000s, like what that mental transition was. This feels very similar to that. And so kind of talking about those foundational layers, what are blockchains, how are they applied, what are the current use cases that are seeing traction, that are clear improvements, and then what are those that are maybe still early, still speculative. And so for our company, it's been a very long journey of education. And you can imagine not just the questions that we get from customers about what is this technology, what does it mean to us, but then from our own internal teams, right? From our executives, from our board, especially people that maybe still thought that it was, for buying drugs on Silk Road, right? I mean, there's a lot of understanding gaps there, depending on your exposure to this. And so having to go through that and get people comfortable with it, get over some of those hurdles, and then start to really connect to them some real business value with what this technology can deliver. And for us as a business in the commerce and banking space, probably not surprisingly, the transactional capability, the payments use cases, those are the most immediately applicable. And that's really where we've spent the most of our, let's say, production commercial offering time. And we've done that both through organic development and also through acquisitions. So getting back to the strategy side of it, thinking about how much of this do you want to organically create versus how much do you want to maybe accelerate your path to market. There's pros and cons to that for anybody who's tried M&A before. It never goes exactly how you thought it would, but there's advantages to doing that, and that was part of our strategy there. And then, you know, as we kind of begin to lay those first few planks to start thinking about, okay, what's next? What is emerging today that's going to be, let's say, close to mainstream 3, 4, 5 years from now? How do we begin taking steps now to prepare for that?
Sure.
So we can jump into more of the details and specifics
Yeah,
later.
so
but
let's
that's
get
kind of
the next round.
the high level.
Right. So I think some people still think it's used for smuggling illegal substances on Silk Road. We'll get into the use cases in a
I thought we
second.
were going to learn how to do that tonight.
I'll send you some theory over tornado cash. You can be on the government watch list tomorrow.
So let's get to Frank. Frank is the Chief Digital and Technology, I'm sorry, Jason. My brain is scrambled.
I took it as an
that's
honor
Frank.
that he called me Frank.
Sorry, Jason. So he's the Chief Technology and Digital Officer at the Federal Bank in Atlanta. And he's had a number of engagements at senior levels with a lot of enterprise companies, which he'll definitely share with us. So share your experience with blockchain and your view of the world from where you sit now.
No, great. So a little bit of a different background than I would say these two experts next to me. I'm coming from the business side. So really, what does blockchain mean? And I actually last week, by the luck of the draw, I had dinner. I live up in Alpharetta, so up in the Alpharetta area with some business executives as well as technology executives. And it was funny, since we were meeting today, I just kind of said, I'm going to cue up this discussion to see, right? So usually I get more lightning than thunder when I speak. I'll let these guys bring the thunder. But I think the first misconception is that they don't really have a clear perception of what is it. And you're right. Rube said, the first thing that people go to is cryptocurrency and block, like it's one. And that's really not true. It's the underlying technology that can be utilized in many other different ways. My background, I've been with the Federal Reserve Bank almost 2 years. I had a stint at KPMG for a couple of years, so I have some use cases with clients that we've done, but mostly from big enterprise organizations, the Pepsis, the Xerox, Stanley Roberts, Allstate to mention. And so one of the things as we talk about, kind of new and emerging technology is really to say it when it starts at the entrepreneurial level, because that's where they really all start. The big enterprises are always looking at what is the return on my investment. And some of it, and I remember when we were talking the other day, you're not only looking at technology, but can you change your processes? What is your ecosystem? You put in cutting edge technology, which I support. So I have to tell you, my question, I'll ask it back to these two fine gentlemen, is when? No, I'm sorry, it's here. How long to more of a maturity level? I don't, I might have a view, but I'd love to hear what they're gonna say when we get into it. But from a business perspective, when you sit down, you start to measure, especially when we are partnered with organizations like NCR, a lot of our R&D out of enterprises are gonna come with our business partners. Of course, we have to see how we're gonna integrate that within the ecosystem. So when we look at blockchain as a whole, the challenges that we have, we get a little bit, there's a lot, but a lot of it is also straight up perception. And everyone, and it was funny, last week we were talking about it, and I said, well, let's just think about it. I mean, chain of custody is a really big one in blockchain from my viewpoint, but what is the core, what is the new gold today? What can you sell as a business that's the new gold? Information. You got it. Ding, 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 data, information, right? But of course, what happens if that data gets misused or changed, or even let's use it in our personal life, stolen? So blockchain has a good foundation in order to address some of those key issues, which starts with data as we take that journey. I'll stop there because I know we're going to have a lot more dialogue, but we can go in on kind of what are some of those challenges, some of the use cases. So I'll pass it back to yourself.
Yeah, you sound like me in 2019. That literally is the opening for my first TEDx talk. What happens when your data gets stolen?
Damn, I didn't think you'd remember that. I just saw that last night.
So, Frank, let's get into the use cases. I know you guys have worked on a few different use cases, and let's just hone in there. So, when you think of use cases, what do you consider? You know the foundational technology, you know how it works, but then there is a business strategy side to it. It has to have a return on investment, and it must do things faster, simpler, better for the customer, right? So, from that standpoint, what kind of use cases have you guys experimented?
Yeah, so I mean, I'll put in maybe two broad categories. One is blockchain use cases specifically around transfer and store value, right? Which is the original use case, but also the one that's been the most developed. The other category is really around identity and data, and specifically ownership of that. And so I think those two are on different trajectories. You know, all of us are familiar with Gartner hype cycles, right? Like where is it on the getting to peak awareness, trough of disillusionment, onto broad adoption? They're on a different time scale. And so for that reason, most of our production work today is focused around the transfer of value use cases. And so even if you think about what this system is, right, a blockchain at a very simple layer, oversimplified, is really an open shared state database that anybody can read from, and that anybody who has, appropriate, let's say, tokens or access can write to. And there are a lot of use cases where that has value. There are many that it doesn't. And so I think that's one of the things that, we can maybe get into, but a lot of us in this space spend a lot of time, oddly enough, talking people out of why you shouldn't use a blockchain for something, because there's lots of things that you don't need it. In fact, SQL databases are phenomenally good at doing a lot of things, and many times are the best tool for that job. But when you need a open, immutable ledger that anybody can access, that's when you start to get, okay, maybe this could be one of those use cases where there's value. And so for things like being able to identify transferring value from party A to party B, in today's world, that is an area that we simply cannot do that without a lot of intermediaries, right? And if you look at the foundational layer of our payment system, in this country, in any country, if you look at the interconnections between those different countries, for anybody in this room who's ever tried to send money internationally, you're probably acutely aware of how those systems maybe don't work the way you'd expect them to, right? Especially if somebody, let's say of a younger generation is used to being able to take their phone out and just send money, in theory, to somebody standing across the room from them. They don't really understand under the covers like what actually happens when you hit, send in Venmo or PayPal, right? The money doesn't actually move. And so when we start to think about these use cases like cross-border payments, which is a major component of the type of commerce we facilitate, right? Multinational companies, international customers, business-to-business vendor relationships, simply moving money around the world, and even intrastate is quite expensive. It's very slow, and all of that really comes down to trust. All of these systems that we have intermediaries. Each of them have to have some way to validate that the money is transferred properly to an authorized party, and that takes time and money to do that. And so, you have this delayed settlement world that is just an artifact of the way the system works. Being able to do that in a peer-to-peer way without any intermediaries has the potential to vastly accelerate things like payments. And so that's where we see the use case. That doesn't mean that it's, let's say a stable store of value. It clearly is not. In most cases outside of, stable coins pegged to fiat currency. But in a lot of contexts, you don't really care. And so a great application of that, to share is we have a cross-border payment solution that runs entirely on the Bitcoin network. No party involved in any transaction, not the cross-border payment agent in a store, not the customer sending money, not grandma in Brazil who's receiving it. Nobody knows anything about crypto, doesn't care. Doesn't really even have the awareness that it's there. They just know if I walk in and hand you money, it gets to the other side instantly. It doesn't close on bank holidays. It doesn't take more than a few seconds to transfer. And so that's just an example. It's just a better way to do it.
Yeah.
And it relies on this open shared state network that exists.
I want to ask the audience, just piggybacking on that, how many of you knew that a company like NCR, one of the oldest, most reputed companies moving money on
Really
this
old.
planet, uses or has a product that underlies on the Bitcoin blockchain network. How many of you knew that? This is just a matter of perception. So coming back to your use case, what I'm curious about is what was the motivation getting into it? You know, typically these things happen. You know, some board member, some senior executive hears about it in the media or from some conference. So the motivation was either process efficiency, as you described it, getting things simpler without any intermediary and lesser fee, or was the motivation more competitive? Was there a market that you were getting to that you couldn't otherwise, or your competitors might have into that market?
It was, I think depending on the use case, it was both. So that specific use case, it was actually how do you break into a market that requires a significant level of infrastructure and a significant number of international and national relationships and regulatory compliance requirements. And that's not to say that you don't need those for this type of transfer, but it's not the same thing as needing a FedMaster account or needing access to the international SWIFT messaging system. And so being able to break into a market where, let's face it, there are really a couple of major businesses that facilitate most of that transfer in the United States. There's really 6 correspondent banking entities that do almost all the international transfer, the big large banks, B of A, Citi, those kinds of companies. It's really hard to go and say, I'm going to get into that space and compete, right? Because you're riding either on top of existing infrastructure, which means you're going to have to do something where that's cost, and then you're going to do cost plus. How are you going to be competitive and differentiate? Or alternatively, what do you compete on, right? So can we compete on faster transfers, lower cost, right? Those are the areas that you can compete, and that's just a way to facilitate that kind of cuts through a lot of those steps that are there. So that's really to break into a market in a way that if you try to go the traditional route, it'd be, at best you're trying to sell below their offering or, very low margins, or you're going to run negative for some long period of time trying to get enough market demand out there to create a network effect.
Right. So I just want to point something out here. Some folks may have missed it. He mentioned the SWIFT network, and Jason can definitely explain much better than I ever can. So think about an existing ecosystem, an existing banking network, which has been around, 45, 50 years or so, right? That's what most of the world commerce runs on, or used to run on, let's say 10 years ago, right? 45 years or so. This is an alternative ecosystem. It is an alternative network. And when I make that statement, it becomes very pertinent, not just for trade and commerce as companies or individuals, but also geopolitical. And we'll get into that discussion. So think about if let's say 20 entities control this said network, and one entity doesn't want to be part of that network, then I won't take any names of countries, but you can guess, or they kick them out of that network, what are the implications of that geopolitically? So keeping that thought in mind, that's an excellent use case. I want to come back to the identity use case because that's a whole different track. So let's keep on this one. Jason, can you help us understand this whole SWIFT network and the way the world commerce works, and why blockchain is a transformational change, not just an incremental change?
Yeah. So let's really talk about why or how can blockchain help us in the fintech world, which is in the payment side of the house. Well, first of all, if we really think about it, we want to make sure it is secure. Now, I read something, and I'm going to see if you'll validate this, that they said blockchain is unhackable. Now, I probably challenge that's probably not 100% true. Bad actors are going to try to go ahead and crack in. So when you look at companies where you have, and we started speaking about the CBDC, the central bank digital currency, okay? So let's first start, Central Bank of the United States, physical monetary funds, right? You can touch it. Then you have commercial banks, okay? We've all gone to commercial banks, as you know. It's physical, but how do you pay your credit cards? It's digital as well. Then you have non-banks, and this is where we're talking about from a geopolitical perspective, in a sense that they can actually start to create their own digital currency and be their own central bank. Now, in a sense, it's easy to enter, and as you can see, as we look at blockchain and we look at crypto, some of the challenges of that is it's not regulated. So if it's not regulated and no one's overlooking it, what is the risks? The risks increase very much so. So I always talk about risk. Now we can overcome that, but we have to say, let's talk about what are these risks when we're looking into the payment system. Look, nobody wants to wake up one day and find that their account is at zero, do they? Right? Nobody wants to invest into cryptocurrency and find out it's worth X amount of dollars today, and then a blink of an eye, it's Y a lot less. So I think that the technology of blockchain really is where I want to go, can be utilized beyond the fintech. And that's really where I think we're in our infancy right now. Supply chain, supply chain, supply chain. Think about and I think the SMB market is perfect for this, and I know you asked about Swift, but I really want to represent enterprises to say, if you're all in the financial industry, great, let's talk about it, but you're probably not. How can it help enterprise organizations, that technology for ROI, for benefit, for your customer? And look, for-profit companies, you can say whatever you want. It's about one thing, shareholder value and profitability. And we want to make sure that we reduce the risk of ever losing that type of credibility as well, and reputation. So one of the use cases that I really do like is in the supply chain. Out in the Midwest, a small supplier, it was a supplier of a product that would source their products from around the world. Now, if ever that product comes up and there is an issue with that problem, knock on wood, I hope it's nothing bad where it's causing some type of illnesses to people, but just think about how are they going to figure out today which one of those sources, whether it came from the Philippines, whether it came from Brazil, whether it came from Greece, is that? How can we validate that chain of actions from where this product comes? They can. It's probably going to take a really long time. They're going to pull that product. Loss of revenue, loss of reputation. From the use case that we see from blockchain, and of course, as you know, we're able to track back for the authenticity of where we're getting those raw products from. And we could trace it right back in that chain, and we know that it hasn't been tampered. We know it's been locked down quicker and faster. So what are we doing is quicker ROI, quicker, hopefully, to protect your reputation, but also to fix the issue. So again, I really want to say that it is really in its infancy from an enterprise perspective, but the use cases are still, and I can tell you there's more we have, but right now it's the SMB organizations that are taking the risk, because they don't have the big enterprise networks. What the big enterprises need to probably do is partner with NCR, because they'll help us get there. Partner with Group and his organization on strategy to help, let's use my role, help me to show the vision of the strategy from an expert. And I think that's the most important part as we go through the supply chain and as we take a look at it from blockchain at an enterprise level. So I think that's where I'd love to see. I mean, if you think about it too, so I'll challenge myself. Boy, I love this. Now look on the other side. You know, it's here. So everyone says, oh, blockchain's not coming. No, it's here. Now, the maturity factor is going to be on a level of curve over time. How long? And I don't know. I don't gamble, but if I did gamble, I probably wouldn't put any of my money down to what level of that maturity outside of fintech. Don't know. It's coming. And then somebody challenged me last week. This is really good. I love when they challenge me. They said, well, Jason, how do you know that, the blockchain technology is not a phase because it's in its infancy, it's just going to fizzle out? I said, well, I don't know for sure, I said, but because of all of the use cases and actual real live, even I'll use the word proof of concepts, we have been able to validate that there is a benefit for this. Then they said, well, he says back in 2000 and I think they said 2 or 2003, Walmart, because I always give my supply chain example, I don't know why, because I like to bring it to the business folks face to face. Guess how they were going to be tracking all of their products? And then I'm like, 2000? Are you talking about RFID? Yes. So remember, RFID's coming back now, so if you don't know that. But no, it is. I'm surprised. And Walmart's actually mandating it again. But the point is that I thought that was neat technology on chain of custody. So I said to them, look, an RFID never went away. It's still out there in certain segments. If you have a Peach Pass or an Easy Pass or the Florida Sunstate Pass, all RFID technology. So my answer on blockchain, it's not going anywhere. how we can utilize on the ROI and the return on investment and apply it to your customer, and have enterprises get experts in to take them on the journey. Because I can tell you right now, some of you I've met, some of you are in recruiting. I need blockchain experts, I need blockchain technicians, I need blockchain architects. A, hard to find. B, expensive. So remember, I said to these guys, I'm gonna come up and I'm gonna talk business. I'm sorry, I'm a business guy at heart. I need them. We need them, sorry, I'm probably speaking selfishly, but we do need them, and I think that's how we can be successful as we take that journey. So sorry, I didn't answer your question, but I'm trying to dive in a different perspective.
So I'll jump on something you said. You said blockchain, people claim that it is unhackable. How many of you believe that? Yes or no? Yes, raise your hand. No, just keep quiet.
That's how you
What was the
define
question?
hack.
What was the question, sorry?
Blockchain is unhackable. Yes or no?
I say no. It's not unhackable.
Okay.
Eventually.
Okay. Anybody else?
I'm with Bob.
With quantum computing.
Well, let's keep quantum out, because when quantum comes, all the regular rules are out anyway. Like, we have to change all the algorithms. This non-quantum computing goes out the window anyhow. So that's a different game. And to answer, if you want to get into that, blockchain algorithms will also be quantum compliant at that stage. That you won't be. It's not a fair fight otherwise. Anyhow, so forget quantum. Otherwise,
99% it's not hackable, but there is always some chance of that happening.
okay. Yes, sir.
So I realized that crypto is not blockchain, it's an implementation.
Right.
The attack surface may not be the underlying technology of the bits and bytes itself, but there's exploitation of the humans.
Absolutely.
I.e., I grab your purse or your keys or whatnot. There's transactional exploitation as well, where you could purchase or push transactions in such a way that you pull coin over to yourself.
Mm-hmm.
So it's not the technology, but it's the attack surface is the humans
Mm-hmm.
in the process of managing the transactions themselves.
Right.
So
Exactly.
I can't say yes, quantum computing, you'll be able to figure all sorts of things out, but that's at the code level, exploiting
Yeah. Yeah.
crypto
Fair
at
enough.
that level.
Yeah.
But yeah, today, how many times have you heard someone has been exploited and they've lost X amount of dollars? or
Yeah,
whatnot?
yeah. So most of the news that you hear are at the endpoints, at certainly human endpoints, or even company, individual private company-based endpoints, like their servers or their websites that are eventually hacked. Chains are not typically hacked. Now let's cover two things. I never claimed that blockchain is unhackable. That is actually not a true statement, not ever. What I say is they're tamper resistant, much more resistant than your other networks. And they're a magnitude level better in resisting tampering than any other conventional networks and business processes that especially enterprises use from a security standpoint. So that's just, I just want to put that out to everybody that don't think that blockchain is unhackable, but it is definitely tamper resistant to a much higher degree. Would you agree with that?
Yeah. Well, remember the marketing engines are out there. And it's funny. I'm giving a perspective of 9 of us, not 10 of us. I was 10 of it, of what the perception is.
Oh, of course.
And that's very interesting. And these are business folks. They're not, I would say, each and every one of you technologists. And I thought it was really interesting when they brought that up, unhackable. And they're looking at me, and I'm like, what do you think, Jason? I'm not a gambling man. I'll put $1,000 on the plate saying that I'll take that it can possibly be hacked. Let's call it that way.
I think it's important to separate two things. That, like, one, the word hack is, we didn't define it, so
Right.
you can define it any way you want, and it's able to be compromised. As you pointed out, it's usually the human element, social engineering, mistakes. Engineers do stupid things like store private keys on publicly available cloud servers.
That's right.
Some people lost several $100 million last week. Those are the kinds of things that they classify as hacks. I do think it is important to differentiate that with this idea that somebody else, without your permission, without your private keys, could affect transactions with the assets that you hold. And I do believe that that is